This is Eric Muadhi, themarket.com. It's March 12th, 2009. It's about 30 minutes before the market close. Of course, I don't know where the market closes for the day, but it's kind of safe to say with the Dow up 187 off its highs that we might have a positive close for the general market. Might. With half an hour to go, I think that's locked in. But and all day, if you are following me on Twitter, we were looking at ERY to see whether, as it moved below 50 on its RSI, we were looking to see whether a close below that level would mean a big rally in the market. So, and that's what we have. Also, it's important to note that the Dow is up about 10% from its lows earlier this week. That's a big move, I have to, I hate to say that I told you so, because of course I did not know. But I like to make the point, one, because it's a fact, and two, because it's good for business that, as of late last week and actually over the last 2 weeks, but also in my most recent video entitled Dark Clouds Opportunity, I was telling you that all of us, including at some point myself, all of us had become experts on how the Dow was gonna go to 5,000. Everybody, you asked, and if you talked to me in the last week, you gave me a reason why you knew the Dow was going to 5,000. In fact, you were sure about it, and just that by itself made me wonder whether we were missing something, and maybe we were all too intelligent, too good for ourselves at the market, just by the nature that if everybody is playing the same game, then who else is going to be the last fool? So the market is a game of opposites actually. But if you look at it from an energy kind of a view, if you take a look at the S&P 500, first and foremost, the S&P 500 is above 741, which was last year's daily closing low. So we get some reprieve from that sell-off earlier this month. And it's also important to note that this is the S&P 500 30-year monthly chart, that the S&P is now positive for the month, which means that this line that corresponds with the lows in 82, 84, 87, and 1990, this monthly lows line is now holding the market together, because as long as we stay positive this month, then this line has not been broken. And that might sound like that was far-fetched early on this month. In the last 2 weeks, as we broke here, we thought that was history, but we seem to be recapturing this support. And also notice that the RSI now has an opportunity to move above this downward sloping line and give the market some kind of just a little bit of room, and maybe stop the slide that has been very steep. And also take note that this support line right here, with this line here going back to 1982, corresponds to 38.2% retracement. So forget our opinions, forget anybody's opinion. Look at it from the whole 30 years of trading. We've come back, and we are testing this line here, which is actually 38.2% retracement. So it's not a small deal that the market kissed this price right here, and it's now rebounding. Could we have made a low for the bear market? I have no idea of knowing, but I can only play what I see. If you take a look at the Dow Jones Transport Index, this is again going back 30 years on a monthly chart. You see again this line that corresponds with these monthly lows is just now this month offering support, and now we are bouncing back above this line. So maybe we were all too bearish. Maybe all of us were just too bearish. And many people are very convinced. And if you take a look at an instrument like FAZ, down 57% this week. Ouch for those who are all holding. A word of caution: if you have huge profits going into the close today with GE, nobody wanted to own GE under $7, even in $5, nobody wanted to touch it, but now they are fighting to own it at higher prices. We are all that's weird reasoning, but anyway, GE is now coming into resistance on this price channel top line, so there might be some pullback from current levels. So if you have profits, I would encourage you go ahead and take profits. I'm gonna bring back one chart here, which is the Dow Transport chart, because on this bring back the S&P 500 chart, monthly chart, because I show this is this line here is the VIX monthly chart since inception, and you see the VIX monthly chart is showing us a double top when compared to performance to the S&P 500. So that double top might not be a small development. Also, if you consider the S&P 500 with the original VIX, the VXO, you will notice that now we have a double top comparatively. So this, guys, this is not a small development. What might come out of this is, dare I say it, even though I don't know, that this is the end. Of course, I don't know, but when you start seeing such developments, monthly double tops, maybe something bigger than we know is developing. And nothing can move a market higher like climbing a wall of worry where everybody thinks that the market has no legs. This is Eric Mwale, themwale.com. I might have another video for you guys later on in the evening. Go into details. Peace and blessings to you. Jack's calling me. I am out.